What up, Hyperchange? Welcome to another episode. Today we're going to talk about Spotify stock. I'm going to break down an options trade that I made. I very rarely make options trades, almost never, but I recently did. Very interested on this Spotify Joe Rogan deal. I think this is a huge needle mover for the platform and could drive significant traction, totally re-rate the stock. And I think generally Spotify is extremely undervalued. So I'm a shareholder, bought some stock, but I also bought some January 2022 options. So in this video, I'm going to break down, why I bought options, how the trade is structured, how I'm going to make money, kind of what options are, sort of an options 101. I used to trade options all the time back in high school and kind of got turned off from it and retired is what I call it, because I think most options trades lose money. It's extremely risky, extremely volatile, and just something you should do with extreme caution. And I feel like I've already had extreme anxiety since putting on this options trade. So I don't know how many more of these I'm going to do, but I thought it would be a fun video to make. Really what an option is an option on a security. So either a put or call is mainly what people are talking about when they're talking about options. A put is the right to sell at a certain price. A call is the right to buy at a certain price. And so Spotify, I'm super bullish. I think the company's stock is going to go on a tear as Joe Rogan moves. They get way more users. Wall Street realizes this is a Netflix-esque competitor, not just doing audio, but doing video. And I think the stock's going to go way up. So instead of just buying the stock to make money on it, I actually have the opportunity to buy an option to buy the stock at a certain price in the future. And if the stock goes way above that price that I bought the option at, then all of a sudden that option could be worth, 4 or 5 times the amount of money I put in, even though the stock doubled. So this is a way to basically, without debt, get leverage on your thesis. Basically, I want to buy and get long exposures to Spotify stock with higher risk and higher reward than just buying the equity. That's when the option comes into play. And so what I did for Spotify is I was looking into the option chain. They have a bunch of different dates expiring. So you want to buy a put or call. It can be a week from now. It can be a month from now. Usually they have them every single month, or you can go as far out as possible, which is what people call leaps. So I like to do leaps because I'm a much more longer term investor, not really a trader type. And so the farthest out option I could find for Spotify was expiring in January 2022. So I was looking at, the highest strike options, some of the furthest out of the money, the most risk reward, and I decided to choose the $260 strike price. So basically, I ended up purchasing the right to buy Spotify stock in January 22 at $260 a share for $24.20 per share. That sounds complicated, but we're going to break it down. So here is a chart of what Spotify stock has done since IPO. They IPO'd about 2 years ago. Actually did a very unique direct listing, which is they sort of set a new precedent for that. I thought that was really cool. They have a really awesome CEO, Daniel Ek. They're a Swedish-based company, music streaming service. So they IPO'd 2 years ago. Stock has been pretty volatile, opening around 150, going up to almost 200, going down to almost 100, then popping huge recently, pretty much on the back of that Joe Rogan news, has been driving significant upside into the stock. So for the sake of this video, I'm just going to say Spotify stock is at 187, even though it's a little bit lower than that right now, because that was the stock, that was the price that the stock was at when I actually bought this options trade or options contract about a week ago. And so now let's zoom out. So let's fast forward. So the option strike price I bought, remember, January 2022 is when this expires. So now I tried to adjust the timeline. It's not perfect, but you get the flavor for it. I need Spotify stock to go up way above 260 by this time period for me to start making significant money. This is, just to put the time scale in perspective, 25 months from the IPO. I have 19 months before my option is going. So here is the 260 level that I need Spotify stock to hit for my option to be worth anything or go in the money. So this is a big term for the options, whether you're in the money or out of the money. If the stock is above the strike price of the option, you're in the money because that option has value. If the stock's at 270 and my option's at 260, it's in the money because that option, that right to buy it at 260, has $10 of value because the equity's underlying trading at 270. I could buy it at 260, go right back to the market to sell it for 270. So there's an intrinsic $10 value in that option. It's in the money. But as you can see, my 260 call for Spotify is way out of the money. So it's going to be basically worthless unless the stock goes above 260. So very risky. That would be at least a 39% move for me to even get a penny back from this in January 2022 over a 19-month time frame. So you can think of that what you will. I think they're going to crush this, which is why I bet the option. So zooming out a little bit more, just to put things into context even further, 260 isn't really my break even, because remember, I said I paid $24.20 for the right to buy it at 260. So I have to layer that contract price in because that's actually my cost basis. That's the money I paid. I didn't pay the 260. I paid the $24.20 for the actual right to buy it at 260. I bought the option, not the security. And you might be like, well, $24.20, that's so cheap. But but every contract has 100 shares. So 2420 times 100 is 2,400. So that's the minimum you would have had to buy an amount to put on this options trade at least. And so here you can see that I placed the 284 level, which is my real break even. If the stock's at 284 on January 2022, then the right to buy it at 260 is going to be worth $24. That's what I paid for it. So I would have break even or made 0% on my money. That would be implied a 52% upside over 19 months. But obviously, I'm not in this trade to break even. I think this is going to go way above 284, and that's how I'm really going to get paid. When this goes way, way up, and that's when that leverage starts to kick in, and that's when this really gets fun. So for example, let's just put a ballpark on it. I think there's a good chance that Spotify is worth $350, potentially $400 or $450 per share in January 2022. That's, 67, 70, $75 billion in market cap. That would be about half of what Netflix is worth today. And I'm going to make a whole video series on why I think Spotify is worth that and how I got to that valuation numbers next. But this is just, you have to trust me here that that's my price target. That's what I believe. Whether you agree or not, that's up to you. But I think that Spotify stock could go up 87% in the next 19 months. And now let's play that out just in the theoretical. My option all of a sudden, the right to buy it at 260, if the stock is at 350, is worth $90 per share. So that asset that I bought for 24.20 is now trading at 90. So even though the stock only went up 87%, I almost quadrupled my money on the option. And so that's how you can see where I'm able to get a lot more leverage and exposure if I get the timing right, if I get my call right with options than buying the underlying equity. So that's what has me excited is like, if I think Spotify stock deserves a 50% immediate re-rating and premium, they should be trading at the same gross profit, price sales multiple as Netflix, probably higher because they're growing faster. They're going to start moving into video. That could accelerate all their financial growth. You layer in multiple expansion, accelerating revenue growth, and I think we easily have a double justified over the next 19 months. We can do over 350 per share. We could do 400 per share. All of a sudden that strike, that option contract I paid 24.24 could be worth 120 per share, and I can make 5 to 6 times on my money on it in just a period of 12 to 18 months. So that's the exciting upside. But of course, there's a massive risk and downside, which is that if it doesn't go there and hit all that zone, then if it's anywhere below 260, it's going to be worth 0. And I've literally lost all of my money. In summary, if the stock doesn't move at least 39%, I get 0. If it doesn't move 52%, then I'm not even going to make my fees back. So I need Spotify stock to really go up like 60% at least in the next 19 months to even make this remotely worth it. But the one thing I do like about calls and puts, trading them the way I am, is I can't lose more than I put in. And that's something that's super important to me. I'm really against margin and borrowing money and investing. To me, this is a little bit of money that I think I can play with, that I'm making a really strategic bet. I do think this is more trading and gambling than really investing, which is why I usually try and stay away from options. But I just have such a strong gut feeling that Wall Street doesn't get how big of a deal this is for Spotify. The real news is not that Joe Rogan's coming on the platform. It's that they're pivoting into video. And the fact that they got the most important video podcast in the world exclusively on their platform is going to make their video platform success a very sure thing, or have a great chance at becoming a YouTube-esque competitor for creators. And I just think there's a huge tectonic sort of tidal wave shift going on in the creator platform ecosystem, where Spotify is quietly emerging as a second video player, competing with YouTube. And I think people don't realize this. Over the next couple months and years, maybe year, they're going to get this transition. I think the Spotify stock's going to explode. And so, as much as I hate trading and hate options, I really deep down have this gut feel and conviction and want to take this risk. But once again, this channel is not financial advice. I do not recommend you do this trade. I don't want anyone to follow what I'm doing. I just document what I'm doing so people can learn, and we can have discussions about it. But I do not. I'm already man, I probably shouldn't have done this. I'm already losing money. You can check the option price. It's down from 24.20. So we'll see how it goes. But I wanted to document it on the channel because at the end of the day, I just think this is fun and I'm going to learn even if I lose my money. And this is money that, I don't need. And I think that's a super important mentality. If you're going to do options, is I could lose all my money instantly. I need to be prepared for that. Otherwise I shouldn't be playing this game. And that is why I retired from the options game originally. But anyway, this is Hyperchange. Would love to know what you think in the comments below about options, about Spotify. Did this video help you understand options trading? Was it insightful or educational? Do you want to see more videos like this? And also definitely subscribe, because I've got, I'm going to make a video, because we had the Moonshot Monday predicting that Joe Rogan, or pitching that Joe Rogan should go exclusive on Spotify. They should pay him hundreds of millions. And the Wall Street Journal's oh, did they pay him 100 million? The truth is, what the research I'm doing from listening to Joe Rogan's Friend podcast is he got paid way more than 100 million. And I'm basically, going through to scrape all of his data and make like a financial model for what Joe Rogan would have earned and turn that into a video to value how much Spotify paid for him, which is going to be epic. And then I'll make another video about how Spotify is transitioning into a music platform or a video platform, and that's going to be a game changer. So definitely stick around and tune into those. I'll see y'all next time. Stay safe out there. Peace.